I'm Matt Bishard with REIT.com here in Atlanta, Georgia for REITWorld 2014, NAREIT's annual convention for all things REIT. Joining me for this CEO Spotlight is David Henry, the Vice Chairman and CEO of Kimco Realty Corporation. David, thanks so much for joining us.
It's always a pleasure.
Now, since the start of 2014, Kimco's been equally active on both the acquisition and disposition front. Is this sort of regular portfolio maintenance, or is there something about the current market that's driving your deals?
I think we, like most of the industry post the Great Recession, have been all about recycling. We're trying to sell the bottom parts of our portfolio and add very high quality properties. And I think everybody agrees with cap rates where they are and prices where they are, it is an excellent time to sell. It's less certain it's a great time to buy, so we, like others, are being pretty selective. And in our case, it's easier to buy out existing institutional partners in properties we already own. So something we may own 30% of, we buy the other 70%, and that's a way to recycle the capital from some of the properties we've sold. So it's really all about improving the quality and the long-term growth of your portfolio today.
Now, speaking of improving quality, that brings me to my next question, which is about redevelopment activity. Now, how do you go about that? Is it done on a scheduled basis? Is it sort of as the property needs it? Or do you get a lot of input from your tenants?
Well, it starts with a property by property business review, if you will, by our local people. Their job is to figure out how to create value and maximize the net asset value of every asset. So the redevelopment potential is very much part of that. So can we expand the shopping center? Can we increase the size of an anchor? Can we bring in different tenants? Can we renovate the property? It's all part of what goes on. And spending money on redevelopment gives us the highest return on capital, because if you think about it, we already own the land and the property, and the infrastructure is already there. So if we can add a few stores or enlarge the property or renovate it and get higher rents, it makes all the sense in the world. And what's interesting is, as the economy has recovered and as rents have recovered from the recession, deals that didn't make any sense to redevelop 3 years ago make sense today, because rents have gotten back and there's tenant demand now.
The holiday season's right around the corner. What's your sense as to retailers' optimism about this coming holiday season and the state of the overall retail market?
Well, retailers have had a bit of a mixed year this year. It's been up and down, starting off with some tough weather. I'd say in general the retailers are cautiously optimistic about the holiday season. The back-to-school season was okay, and now they're betting a lot of chips on the holiday season, given that 50% of sales usually come during the holidays. So we'll have to see, but the retailers are going all out to make sure it's a good season.
David, thanks so much for joining us.
Thank you for having me.
For more on this and other REIT news and analysis, be sure to visit REIT.com.